On Friday, we saw a small down day in the stock market. However, is this setting up for a potential sell the news event? Now, last week, we saw the S&P 500 go ahead, make a new all-time high. We look at the QQQs real quick, also making a new all-time high. We look at the Dow Jones, also making a new all-time high. The only one of the four indices not making new all-time highs is the Russell 2000, but the Russell 2000 still had a pretty good week out here. Now, on Tuesday, we saw the CPI data actually come out better than expected. Then on Thursday, yikes, we get a hot PPI reading. And this article sums it up very well. Investors were blindsided by July's hot PPI inflation reading. Why stocks mostly shrugged off. The market said, you know what? The Fed is going to go ahead and continue to cut rates. And we can see right here, even with that bad PPI print in the September meeting, the market's priced in a 92.1% chance that the Fed will be cutting rates during that meeting. However, if we look at this article right here, the Fed can't cut in September, yet the expectations of cuts inflates the bubble. Now, if you don't think we're in a bubble, you might want to think again. And it basically goes on to say the Fed can't cut in September as the decreasing labor force offsets the weakening labor market and keeps the labor market in balance. In addition, the Fed cannot evaluate the effects of tariffs on inflation. Now, we've heard Jay Powell talk about this time and time again. Jay Powell and a couple other Fed members still believe we have not felt the effects of Trump's tariffs, even though Trump keeps coming out saying we have perfect inflation. Jay Powell, you're too late. Go ahead and lower rates. We also see while the Shiller PE is already at the bubble-like level, then B of A says it very perfectly well. B of A says it better be different this time as stocks valuations give .com bubble vibes. And if we scroll this down real quick, look at this chart real quick and we see the price to book value. Look at where it was in March of 2000, all right? Right before everything fell off a cliff. You can see that's where the market peaked out. Look at where we're at now. Back in the .com bubble burst era, we were at 5.1. Now we're at 5.3. So we're even higher now than we were back before the .com bubble burst, when the NASDAQ dropped something like 80% on that down move. Then we look what B of A Hartnett says, U.S. stocks to falter after Jackson Hole. And that's what I was alluding to real quick, because if we come over and look at the economic calendar for next week, Monday, nothing on deck. We come over and look at Tuesday, really nothing on deck. Wednesday, we're going to get the FOMC meeting minutes along with Waller speaking. Thursday, we get a little bit of economic news coming out. On Thursday, we get the weekly unemployment claims, Philly Fed Manufacturing Index, Flash Manufacturing, Flash Services PMI. But then look on Friday at 10 a.m., Fed Chair Powell speaks. But again, this is all going to be about Jackson Hole. Now, we come over and look at the SPY versus HYG. HYG is the chart on the bottom. We saw the SPY right up here, right near all-time highs. But still, look, the HYG is putting in another lower high, at least at this point. That is one warning sign to pay attention to. Then we come over and look at the 10-year versus the 2-year yield. Notice it's on the move again. If we got to watch this closely. If it really starts to spike up, that's going to be problematic for the market. Then we look at the Dow Jones versus the Transportation Index. We talked about this earlier in the video that we saw the Dow Jones making another new all-time high. But look at the Transportation Index in the chart on the bottom. It continues to make lower highs now. So again, we got to put all these warning signs together. I'm not saying we're going to go into a crash, but a pullback seems to be imminent. Then we come over and look at the Fear and Greed Index. With all the warning signs out there, we are still in greedy territory. However, if we look at the most recent investor sentiment survey, this week we came in at 29.9. We dropped down for the second consecutive week, where the prior week was 34.9. The bears this week came in at 46.2. The prior reading was 43.2. Now, if you guys struggled last week in trading like I had a tilt session late on Wednesday, I lost a lot in my prop accounts, and I even lost some prop firm accounts. Tradeify comes in clutch with a massive sale. You can get a 50K Lightning funded account for only $250. I had 3 Tradeify accounts to go ahead and replace, so I ended up buying 3 Lightning funded accounts to replace those lost accounts. And Apex Trader Funding, right now, 80% off all their valuation accounts. And on Sunday, Take Profit Traders, massive sale, 40% off, 0 activation fee, and get your test refunded on your first payout. That sale will end on Sunday. Use promo code Epitome at checkout. So with the SPY making new all-time highs last week, is this going to be a case of sell the news event? We see we have a little bit of a wick on the top, a little bit of a wick on the bottom of that candle. As we dive down to the daily chart, I want you guys to pay attention. We have some anchored VWAPs over here on the chart, one from this swing point over here, the other from the swing point over here. If we want to go ahead and take it one step deeper, we can draw another anchored VWAP, and you can see we're above all those anchored VWAPs, at least at this moment in time. Now, is it really far-fetched to think that we could get some type of retracement down, maybe towards these anchored VWAPs? Notice the MACD indicator, as we made new all-time highs, simply was not confirming the new highs. And if we grab a Fibonacci retracement and measure from that swing low right up here to the swing high, all-time highs, notice right in between the 50 and 38% retracement is where that first VWAP comes into place. The second anchor VWAP will be above the 786. And if you notice what lies right in between both the anchored VWAPs, we have that 61.8 Fibonacci level. And if you notice on the profile, kind of a minus development area, we have a peak of volume over here, and we have a distribution of volume right up in this area as well. So if we can come down and we can start pushing really through this volume, I do think there's a good shot that we probably come down towards that 68% retracement. And if that takes place before Friday or even on Friday, could that actually, instead of being a sell and news event, be a case where the market listens to what Jay Powell has to say? Jay Powell comes out and gives the market what they want to see, and we see the S&P making another new all-time high, setting up some type of ABC structure to the upside. That is a very real possibility. Now, if I throw some EMAs up here on the chart, we have a 50 and 200 EMA. Notice the last time we were able to touch the 50-period EMA was all the way back here in May 1st to be exact, was the last time we touched it. So I do think that we're probably get a little bit overextended in terms of how long we've gone before touching that 50 EMA. Look where the 50 EMA comes in, right near the swing point all the way down here. So do we get a complete reversal of this last leg up in the market? Now, when we jump over and take a look at the 4-hour chart, you can see we've had that push up. And now what do we have in the 4-hour chart? Chop, 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 chop. Could this be nothing more than a bull flag pattern that's about to resolve itself to the upside? Well, if we look at the MACD indicator, look how it's starting to curl over just a bit, where the two lines are starting to touch. And notice, as we've been up here towards these highs, notice the peaks in the MACD indicator. Which way are they sloping? They continue to make lower and lower highs while price continues to push higher and higher. Now, we look at the 30-minute chart, very, very interesting. If we look at the profile shape from Friday, we have a B as in boy shape profile, and you can kind of see the support area that we have down here at the bottom. If I go ahead and draw this out real quick, we'll go ahead and highlight this whole entire area, anywhere on the SPY from 643.02 down here to about 642.57. If we can breach below that price point, then there is a good chance we come down towards this high volume node at about 640.81. Then I'd want to refer back over here towards gap support at about 636.86. Then the gap being filled, and then see, can we fill the gap from a few Fridays back at about 632.32. Keep in mind, if we pulled that fib off the 30-minute chart and really encompassing that whole entire move up that we've had, which we already showed on the daily chart, notice the 61.8 Fibonacci retracement would be enough to fill two of these gaps. It would still leave the gap left behind from the beginning of August, but we'd at least be able to take out two of those gaps. So we'll see if indeed we can make it down there. Now, I do want to caution you guys, as we look at the MACD indicator, notice as we continue to push on support, the MACD indicator continues to get weaker and weaker. We get closer and closer towards that zero line. So are we getting ready to flush down through it? Now, if we get a big push below the zero line, then we'll see if the market will come down here, maybe base out, try to come back up, and then maybe we set up some type of A to B equals C to D pattern. Now, when we come over and look at the futures markets, something I warned you guys about in last week's video was the fact that we closed outside of last week's value area high. Now, the rule behind that was anytime we're dealing with the market closing outside of value, I expect the market to come back and retest that value area within the next 1 to 2 sessions. Well, since we're looking at a weekly volume profile here, a session would be defined as 1 week in time. Well, we never made it down there last week. So could this week be the week where we actually make it down towards it, which comes in at about a price point of 6375.75. Then as we turn our attention to this week's volume profile, notice it's a P as in Paul shaped profile. Now, I have videos on the channel where I talk about how to trade the P-shaped profile, but if we start getting below this distribution area, then we expect the lower third of the range to be tested, which would be somewhere right near this high volume area of the profile, about 64.15 down to about 64.06. If we start flushing below that, then that's when I'd really want to get excited about retesting value area high from the prior week. Now, we do want to be cautious because if we break below value area low, which comes in at 64.48, then the market turns and starts wanting to go back up, I would then want to target 6480.00, which is the point of control from last week. Then above that, 6501.5, which is value area high. And then anything above that, you guessed it, we're going to hold our nose and see, can we continue to run the new all-time highs? Now, we do have a potential target up above all-time highs. If we grab our Fibonacci extension tool, we measure A to B, we pull right down here for the B to C leg, and we project up here for D. That's going to come in somewhere in the ballpark of 65, 68. Now, since we deal in quarter point increments, I'm going to go ahead and round this down to 0.25. So 65, 68.25. Now, keep in mind, patterns do bust all the time. So here would be the invalidation point of that pattern. If we get back down below 6453.50, that for me would invalidate the pattern. And then that's why I really would, and that's really what I want to turn my attention down towards some of these lower price targets. Now, as we come over and look at the daily profiles on the 30-minute chart, we can see we have that B as in boy shaped profile. And the majority of the distribution for the day on Friday was built to the downside. Just think about distribution as volume. All right, the further out the profile sticks, the more volume that was traded at that specific price. Now, in the event we get above value area low at 64, 68 and a quarter, I would then want to target the point of control at 6471.75. Above that, I want to target 6481.75. But then I really want to turn my attention right here towards this minus development area. This is a concept that we talk about all the time on the live stream. Now, if you guys don't want to miss the next time I go live, make sure you subscribe. You have the bell notifications turned on for all. And if you guys are already on the email list, you guys already know what you need to do to get a chance to win a Take Profit Trader account. I'm going to announce the winner in Monday's 5 o'clock video. But as we come into this minus development area, if we do make it up there, keep in mind, the first time we come up into it, we expect the market to either reject or simply consolidate up and around that area. Now, one thing to note on the 30-minute chart, we have this potential A to B equals C to D pattern on the way down. Now, in order for this pattern to be validated, we must take out the low from Friday, and that gives us a price completion down here at about 64.44. I'm going to round this up to the nearest quarter point increment since we're above price. I simply round it up, and that's going to bring us to 64.44. Now, keep in mind that pattern is not validated until we break that swing low. Now, if we come over and look at the volatility index real quick, we can see on Friday the VIX was up slightly, only up 1.75%. But we zoom this out, that white line that I have drawn out, the horizontal line, is an area where in the past, when the VIX has come down towards that level, we have seen a volatility spike. And maybe, just maybe, this week we'll see the volatility pick up just a bit. Come over and look at the dollar index. Dollar index on Friday was down 35 cents. Then we come over and take a look at the precious metal gold. Gold also having a little bit of a down day on Friday. Now, if gold can break below the 786, which comes in about 33.65, then we're going to see gold drop down towards about 33.20. Anything below that, then we're looking down towards this next area at about 32.65, down here to about 32.09. Now, before we take a look at the NASDAQ, let's not forget, we still have earnings coming out this week. We have Home Depot on Tuesday. We get Target, TJ Maxx. If we look at the big expected movers out there, looks like it's going to be on Wednesday. COTY is expected to move plus or minus 14%. Look at Target. Even Target is supposed to move plus or minus roughly 9% or so. Then we got Lowe's, TJ Maxx, Home Depot, only expected to move plus or minus 4%. Now, if we come over and look at the QQQs real quick, notice the weekly chart on the Qs looks a little bit different than the S&P. We have a little bit larger of a wick. Now, the S&P had a wick on the top and a wick on the bottom. And just for illustration purposes, notice the wick on the SPY, as you guys see right here, is much smaller than the wick that we see on the QQQs. Also note on the weekly chart, the MACD indicator is still extremely strong. We have a 45-degree angle all the way up with a good separation of the lines, really showing no signs of weakening at this moment. But I'm going to classify the last week's candle kind of a candle of indecision, a spinning top-ish type of candle. As we look at the daily chart, you can see we've had a little bit of a pullback. And again, the MACD indicator continues to make lower highs, even while price continuing to make new all-time highs. Now, one thing we do want to do, I want to go ahead and let's grab our anchor VWAP. I'm going to take one right there from the low. You can see that VWAP will come in right around 569.41. Then we'll grab another anchor VWAP from right over here. And that one's going to come in right here in the ballpark of 559.64. I also want to grab our Fibonacci retracement, measure that last leg up that we've had. A 38% retracement would be a minor retracement. That level comes in about 571. Now, note the first VWAP is right between the 38% retracement and the 50% level, where the second VWAP is just above that 786. And we need to pay attention. If indeed we're going to start a pullback, is this nothing more than trying to set up a higher low and we're going to make a new all-time highs, or can we go ahead and retrace this entire leg on the way down? Well, if we look at the 4-hour chart real quick, notice MACD indicator is looking a little bit tired. We see the two lines just about to cross to the downside, or is it just a kiss and they're going to cross and they're going to go right back up? That last 4-hour candle, a candle of indecision, a doji candle, also an inside bar. Then we come over and look at the 30-minute chart. Notice the MACD indicator is already below the zero line. And then as we look at this, it's just been a kind of a little quiet little drift down a little bit lower. We closed right near the point of control. If we get above this distribution area right here, maybe we can see the NASDAQ come all the way back up and undo that down candle that we had on Friday right near the open. However, this could also be like a little bear flag where we had to push down. We consolidate, getting ready for another leg lower. Keep in mind, we do have a gap from a few Fridays back, which comes in down here about 569.21. That would still be a minor retracement and what could still be a very bullish move in this market. Now, as we come over and look at the NASDAQ futures real quick, you can see we also have not been able to take out the prior week's value area high, which came in at 23,538.25. I do think at some point we are going to come back and test it. Again, the rule behind that is whenever we close outside of value, we expect that the next 1 to 2 sessions will come back and visit that level. And since we're dealing with a weekly profile, a session equals 1 week in time. Now, if you notice, we closed near the lower end of the value area low coming in at 23,753. If we can crack below that, the next target I would want to focus on would be the lows from last week, then value area high from the prior week. And then let's not forget, we still have an untested point of control, which comes in from last week at about 23,268. Now, in the event we get down below value area low and we start coming back up, I do not want to use the point of control as target number 1, which comes in at 23,933.5. Instead, I'd want to use this high volume node at about 23,800. Then above that, we could use that point of control. Then value area high, 23,965. Above that, I would look for the market to make a run to new all-time highs. Now, as we come over and look at the daily profiles on the 30-minute chart, notice we had this B as in boy shaped profile. We had a push down. We had this consolidation. However, could we be about to bounce in this market? We can see that we have potential left shoulder, head, maybe a right shoulder over here, or do we just simply gap right on down on Sunday night? Let me know in the comment section down below. Do you guys think the futures markets will gap up or gap down come Sunday night? Now, in the event that this holds, that could be a little ABC pattern up, and that would bring us right up here towards a structure breakdown point. Now, that structure breakdown point is really anywhere from 23,872 right up here to about 23,881. Now, in the event we break below value area low at 23,770 and a quarter, then the market turns and starts coming back up. I would want to target the point of control, 23,807 and a quarter. Above that, I'd want to target value area high, 23,849 and a quarter. Above that, that structure breakdown point, then anything above that, I'm really looking for the market to go ahead and really take out the highs that we saw from Friday. And then we'll see, can we continue to run to new all-time highs? Now, one thing to note, in the event we break value area high and we start coming back down, I want to target the point of control. I want to target value area low. I want to retarget the lows from Friday. Then anything below that, I really want to refer back over here to the weekly volume profiles on the 4-hour chart. Now, if you'd like to learn how to connect Take Profit Trader with TradingView, then you want to make sure to check out this next video right here.